Good morning, everybody. Welcome to Fractal Effects. If you're joining us today and you're following along, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Be sure to check us out on fractaleffects.com, where we teach probability trading using algorithmic data. Let's jump onto the charts today. We're going to be looking at NAS and ES. We do have news dropping at 7:30. It's an orange folder, crude oil inventories. So waiting for confirmation. We're getting a bit of a retracement here. Two very different charts. NAS, ES consolidating, really tight. Range, back and forth. We have an upside expansion model. We've taken out Asia's lows. Getting a lot of rejection at the bottom here. We got a bearish box. We're in the New York fair value gap. There's Asia's fair value gap. There's London's up here. We're well below the 20 EMA. We could potentially reject off of this. Still waiting for confirmation. Waiting for the dust to clear. So 7:30, or sorry, 10:32 now. Crude oil inventories was at 10:30. Did not move the markets much. Starting to see a push down here. We're right in the golden zone, close to the golden zone, 61 to 79. Let's see if we shoot up, touch this, stay within this fair value gap and push down, get a bearish confirmation today. Getting that rejection now. Still waiting for confirmation. Huge push down now from New York's fair value gap and Asia gap. We'll continue to watch NAS as ES looks way too sloppy. Still waiting for confirmation. Just a bunch of gesticulation back and forth. We're starting to see that push down. We didn't quite reach 61, so this could actually be pulled back to go further. And as mentioned before, we do have an upside expansion model. Usually when we get that model, New York gives us a false move and then pushes back in the same direction. But right now we have a red box. We're under the 20 EMA. And we're just trying to get past the New York fair value gap. It's kind of a mixed bag on higher time frames. Still waiting for confirmation. It is early and we are pretty close to the bottom range here. We check the Fractal Effects back end. Confirmation should be around 11:16. So we use algorithmic data, 20 years of aggregate, to show us exactly where this algorithm is going to be going next. Markets are moved using an algorithm. Essentially what we've created is an algorithmic translator on the back end of Fractal Effects. So that's when the average confirmation was 11:16. Around here. Oop. Most likely around this time. Could be sooner, could be later, but we're hoping that it's around this time. That's when we'll look for a retracement as well. Right now we're below the 50% on the fib. Going for that push now. Here we want to see a candle body close over the dealing range right here, this gray line. We're not looking at ES much right now. Again, just too much gesticulation, too convoluted. These are, again, two very different charts. Even though these are supposed to be parallel markets, these are supposed to be running congruently with each other. There could be some manipulation coming here. So we bounced off of New York's fair value gap, pushing down. Again, pushing off of Asia's fair value gap, close to confirmation. Let's see if we get a bearish confirmation. And if we do, it could most likely just push from here. I don't see it coming too deep since we've already tapped the 20. We've already tapped the 20 EMA. We've already tapped New York's fair value gap, Asia's fair value gap. Today might be one of those days. If we do get a bearish confirmation, we might not get too much of a retracement before it pushes down. As far as how far could it push? 19,374 roughly. Down to there. That would be the previous day's lows. Not to mention Tuesday's range is right there as well, painted out the aqua line. Close to getting a bearish confirmation, still waiting. Could be a quick day. We've been testing the alerts on the indicator on the newest version. Everything seems to be working perfectly. We might roll that out actually a lot earlier. Now with most alerts you have to kind of put in specifics of like this has to be broken, that has to be broken. With the new spotlight indicator alert, it'll just let you know, regardless of which side you get confirmation, that you just got confirmation. So then you can start looking for a retracement at that time if you have a busy schedule, for example, or if you don't have, say you forget some of these sessions in the afternoon overnight session, it'll just send you an alert to let you know that that has confirmed. And you can always jump onto the charts and look at a later time for that retracement. So we're getting close to a bearish confirmation here, 38 seconds. Let's see if this sticks. Here come our standard deviations that drop right as we get confirmation. This is a dynamic indicator. Paints out everything for you. And again, previous day's lows just happen to be between 1 and 1.5 standard deviation, closer to 1 right here. This is the low-hanging fruit. So we want to see five, four, three, two, 1. All right, so we have a bearish confirmation. I'm not expecting too much of a retracement now. This fair value gap becomes our area of interest. Make sure you move your fibs. We can get rid of this green line since we already have confirmation now. This could move pretty fast. So that's the fair value gap of interest right now. We want to see price at least retrace into here. Change this to a brighter color. ES also confirmed. We're already at 0.5 standard deviations. I want to see it retrace. Tap that consequence encroachment, which is the midpoint of this fair value gap, and then we will see what it wants to do from there. Still waiting for that retracement. Let's see. And again, we've already tapped the 20. We've already hit the New York fair value gap. I don't see it doing a deeper retracement today. It barely got to, did touch 61. Or rather, it was actually under once the range was forming. Now that the range is expanded. We should be seeing a retracement now. I want to see the market pop up. Tap the midpoint of that fair value gap. And then we'll start looking for an entry to go short. We have Tuesday's range here in the aqua line. We have previous day's low here in the white. Change that to easier to see. So in less than 1 minute, this fair value gap will be confirmed as soon as this candle closes. And then this becomes our area of interest. Again, if it keeps pushing and leaves without us and makes this a breakaway gap, then there's not much we can do about it. We're at 1 standard deviation already. I want to see what it does in this fair value gap. Just patiently waiting. We have 4 minutes and 15 seconds roughly. And if this fair value gap stays open, then this one becomes a a breakaway gap, which means it might not get up there. We'll start seeing if there's any gesticulation in this fair value gap. But hopefully it closes this and starts moving up. This is our area of interest still. Closing in on 11 o'clock. Three minutes, 15 seconds left in this candle close. We would like to see this gap closed and price move back into this range. The next 2.5 minutes here. We don't want to see this turn into a breakaway gap. Otherwise, we'll look for entry in this region. We already have a bearish confirmation. We have a bearish box below the 20 EMA or below all the PD arrays that the indicator has painted out for us. We have reached 1 standard deviation, so the only real target right now is the previous day's lows. And then below that, we have a 4-hour fair value gap that starts at 19,304. That's the beginning of the 4-hour fair value gap, so it could dip down into that. That's the next higher time frame PD array. One minute left. So it could leave this gap. Let's see if this turns into a breakaway gap. Price slowly moving back up. 36 seconds left. Three, two, one. So it's left that gap open, which means it could just jump in here. What we want to see is, again, candle rejection, gesticulation happening here. This has to look obvious. I would still prefer it to tap to this fair value gap since it is the bigger one. I want this to look obvious. ES also pushing up. ES didn't make another fair value gap, so this is not a breakaway gap. ES will most likely move up into this fair value gap. Make sure you guys are looking at the right chart. If you're trading CFDs or trading futures, so we're getting a rejection, but I don't believe it's in that fair value gap. Just a little outside of it. Yeah, still not interested. Sometimes when the gap is this small, what they do is they create rejection here and then sweep it, tap into the bigger fair value gap, then push down. That's what I'm more interested in. And again, if it pushes without us, it pushes without us. It's pretty small range today. Closing in on 11 o'clock. As mentioned before, it might want to move quickly. So it might not want to even come all the way up here, but it hasn't even barely touched this fair value gap at all. We haven't hit any of our major PD arrays. We have not retraced back into the dealing range. Remember, there's an 84% chance we will retrace back into the dealing range after we get confirmation. As mentioned before, we are high probability traders. That's when the probability is at its highest. So if it comes back into this fair value gap, maybe even skims the 20 again and rejects, this would be a good area to look. But right now, again, it didn't even tap this fair value gap. Just kind of left. And if it leaves without us, that's fine too. We're at 11 o'clock. We're already closing in on past one standard deviation, getting close to previous day's lows. Remember, even though this is day trading, this is not everyday trading. There is no chance to get in if it doesn't retrace back into our range, and that's all right. Again, if it continues to push from here, we will conclude this session, but we'll go over a couple of things from yesterday's session. This is the beginning of the 4-hour fair value gap down here, which is right at 2 standard deviations. So we have hit previous day's lows. No real entry was given. So while we wait for that, as you can see, London session, we got a bullish confirmation. Not much of a retracement back to the EMAs that I gesticulated. Asia session, we did get a bullish confirmation, a retracement back into the range, and an extension. So this was a good session. As mentioned before, there's 3 different sessions. If you can't trade the New York session, jump in on the Asia session. It's in the evening. London session overnight. So this didn't really give us much of an entry today. We did get a bearish confirmation. Not much of a retracement, actually, since it didn't even touch this fair value gap. So technically, it left 2 breakaway gaps. So we have swept previous day's lows. Again, I could tell this thing was going to move quick today. We were hoping that it would do a quick retracement here before pushing, but it had already done a retracement before the range was even complete. It had already touched New York's fair value gap, moved in well around 50% at the 20 EMA. Bearish confirmation came quick. So now that we're close to 1.5 standard deviations, and at 2 standard deviations is when it hits that 4-hour fair value gap. At 2 standard deviations, that juice has already been squeezed. That orange has already been squeezed. Nevertheless, we want to see more days like this where we get a quick confirmation, and if it's given us an entry, we're in and out. You should be in a trade within 1 hour of the range formation. And if you're not, conclude the day. Go off to work, hit the gym, whatever you do. That's the whole point of fractal effects trading, algorithmic trading. We don't sit in front of the charts all day. We have specific sessions, and we have 1 hour to get in and out. That's it. I believe we've tapped 1.5 standard deviations. Yeah, this thing's just leaving fair value gaps, breakaway gaps. It might not retrace. Or if it does, it might retrace, do a shallow retracement. But again, unless it hits our dealing range right there in the gray line and comes close, our probabilities are low of catching a trade outside the range. 84% chance that the market was going to retrace back into this zone. If it leaves without us, it leaves without us, that's fine. Sometimes the best trade is the trade not taken. We'll give this a few more candles. If it keeps pushing down, then we will move over to some learning material from yesterday. Yesterday that trade came super late, but it was a winning trade. It hit our TP, then it quickly retraced. And after hitting our TP, it then hit, even if somebody hadn't taken TP, it actually hit the break-even mark, I believe, before pushing up. Where we picked the absolute lowest point yesterday before that market turned around and pushed up. That was all specifically based off of fractal effects, our algorithmic data, and our strategy. It's just about staying patient. So we've already reached 1.5 standard deviations. Usually we aim for between 1 and 1.5. Today, Fractal Effects on our dashboard, it said it was going to be roughly around 1.2 to 1.3. And we've already exceeded that. As mentioned before, what happens is our probabilities decrease once we've already hit certain targets. So we've already taken out previous day's lows. It's pretty much taken out everything, taken out Asia, London, and there's a 4-hour fair value gap down here at 2 standard deviations. But again, we'll watch. Let's see if we get some kind of a retracement. Now it has to look beyond obvious for me to be interested. I want to see it retrace all the way back up here. Touch the dealing range, hit that 20 again, and show me a wick, candle wick, a couple of them. Then I'll start looking. Starting to push up now. ES left a volume imbalance right here. So after a fair value gap, the second point of interest becomes volume imbalances, where there's no space, a void between two candles. So this could essentially tap into here and push down too. But since we've already reached 1.5 standard deviations, unless it comes all the way back up here, I'm not interested now. It's left a lot of breakaway gaps, and it's already squeezed our orange. Could it go further? It could, right into this 4-hour fair value gap that's below this. But there's no meat on the bone. I want to see it come all the way back up here, and then we'll look for an entry. At least that way there's enough meat on the bone for us to even aim for that fair value gap. Always aim for 1 to 3. If it just continues to push, we'll jump on to yesterday's session just to go over a couple of things. And then we'll conclude the session. Let's see if we get that push back up. Remember, anytime you start seeing consolidation, you're just engineering more liquidity. buy orders and sell orders. And if we see that happening here, then most likely they'll sweep past this fair value gap and maybe tap in here. But we keep driving down. As soon as it hits 2 standard deviations, I'm no longer interested. Take a look at this market. When you zoom in, no fair value gap was hit. That one was not tapped into. That bigger one just left wide open as a breakaway gap. Gap, gap. Nothing's coming back. There are no retracements right now. And it's driving faster and harder to 2 standard deviations. And that 4-hour fair value gap. So no entry was given. Closing in on 11:15. We might just have an early session today. That thing is driving. ES, also close to Tuesday's range, top of Tuesday's range. Actually, sorry, that's bottom of Tuesday's range. That's the top of the range. Tuesday had a big range. And there you go, 2 standard deviations. Didn't give us an entry. And now it's squeezed all the juice, so there's not much left. Even if it retraced now, not interested. Because now, it could drive a little bit further into this 4-hour fair value gap and use that as a rejection to just drive through it to the upside. So when it comes to PD arrays, like a 4-hour fair value gap, we use them as targets. You can trade to them or you can trade from them. But if we started trading from this fair value gap now, that would go against our confirmation and the session bias, which is bearish. So we are done with this session. I just want to quickly go over yesterday's session, just to show you that you can jump into a trade late in the game. Just got to be patient. And even Asia's session actually was pretty clean yesterday. We'll go over that as well. So this is yesterday's session. We had a bullish confirmation. We had a draw back into the exact zone we were looking at, which was London's fair value gap, which was the 20, and then it pushed even further. We didn't get a rejection at the 20, we got a rejection at the 50. And then as soon as we saw this candle, we started looking. 1, 2, 3 candle rejections. We got in right at this candle. But now, look at this. Look how close it came to taking our TP out. Our stop loss was 2 ticks below that candle. Sometimes you just got to be patient. And it came back around again. But by that time, our TP was right here. Remember, this came pretty late in the game. Right around the time that we would be done for the day pretty much. After 11:30. And then, again, it drove up. I believe this was the candle that hit our TP. And then it drove back down. So you would have hit your TP here, and even if you hadn't hit your TP, you would have at least moved your stop loss to break even, which was here. They took it out, and then they drove up. And then let's go over Asia's session real quick. Asia was, there's not much volume in the Asia session, but it doesn't mean that you can't get a good trade, anywhere from 15 to 30 pips. Which is a pretty good play. So look how tight that range was. Again, not too much volume, but the rules still stuck true. We had a confirmation, bullish confirmation, a retracement back into the range. Took out the lows, pushed up. We had that drive. You would have got at least 1 to 3 standard deviations. 1 to 3 RR here. Right into between 1 and 1.5 standard deviations. And then, as mentioned before, we had an upside expansion model, but they did not want to let anybody in. Now it's bouncing off of a 4-hour fair value gap, so it could actually drive all the way up, but we're not interested because it goes against our session bias. So we will conclude the session there today. Today is Wednesday, so join us tomorrow. We're live Tuesday, Wednesdays, and Thursdays. Check us out on fractaleffects.com. Make sure you hit that subscribe button, turn on your notifications if you hadn't, and have a great day. We'll see you tomorrow.